Honored to be amongst so many illustrious speakers, inspiring entrepreneurs, and so many of my fellow Hindu brothers and sisters. Talking about investment and business opportunities in Africa. As a continent made up of 53 countries and home to 14% of the world's population, the limited time I have today will surely not allow me to do justice to the intricacy and uniqueness of this very vast continent. But I certainly will try to give you a bit of a taste for what opportunities do exist in Africa for entrepreneurs as well as investment advisors. As you can see by the screen covers, even The Economist has changed their view from considering Africa the hopeless continent to the rising continent to now the hopeful continent. And if you prefer the more statistics amongst that, Ernst & Young also assessed the perceptions and outlook of Africa by foreign investors. Their study defined the attractiveness of the location as a combination of image, investor confidence, and the perception of the country's ability to provide the most competitive benefits of FDI. As the graphs show at the bottom, I'm sorry the graphs are fairly small, but you can see that in the last 3 years, the attractiveness from a foreign investment point of view for Africa has improved drastically to the extent that 60% of foreign investors believe that Africa is an attractive destination in which to invest. Over the next 3 years, that is perceived to be increasing further to where they expect in the next 3 years, 73% of investors expect that Africa will be an attractive destination for investment. The picture on the left-hand side was quite an eye-opening picture for me when I first saw it. The land mass that Africa contains holds or could hold the majority of the large developed markets and many of the emerging markets, or like the professor said yesterday, in the case of Bharat, re-emerging markets. Importantly, this picture not only shows the vastness of this continent, but from an investor's point of view and an investment perspective, as you would expect, where you have a myriad of countries that either can fit into a continent, the individual ability to invest across those different countries have their own unique opportunities as well as their own unique risks. There certainly is risk, but I think issues like corruption, social political unrest, war, the lack of information, liquidity, talent management, retention, manager quality or skill are all seeming large problems. But as an investment specialist, I know very well that where there is risk, there is certainly opportunity. So let's focus a bit on the opportunities that Africa has to offer. It's a fairly common view that Africa's growth over the past decade has been driven by natural resources, and we are lucky to have a large stores and resources and reserves along those resources. However, they are and will always be an important contributor to the growth of the continent. Resources, though, have contributed less than a third to Africa's growth since 2000. The rest has come from a variety of other sectors, including agriculture, manufacturing, construction, and in particular, services. These growth patterns are reflected in the FDI trends. Ernst & Young's attractiveness survey reveals that the shift has happened over the past decade, and the proportion of total FDI projects, natural resources, has shrunk from an average of 24% in 2003 to 2007 to a mere 5% now in 2013. Looking at some of the other opportunities, what does leapfrogging do? Technology leapfrogging. I'm not sure if you're aware of the M-Pesa system in Africa. It has completely revolutionized banking across the continent. Every man on the street can now get access to cash or money via a very simple cell phone. And when I talk about a cell phone, I'm not referring to the specific smartphones that many of us are fortunate to have access to. It is the very vanilla, very regular, old type cell phone, very basic, very cheap. There's a growing middle class. There's continuing urbanization. There's increasing consumerism. There's development by fast expanding demand by increasingly wealthier consumers. I heard an interesting story about Forbes magazine. I think, as you know, Oprah Winfrey is fairly well liked and a national treasure in the US, and certainly draws her full of public interest. So when Forbes was looking to do some studies on who are the wealthiest or richest black people, the immediate assumption was, well, in Africa, that dark continent on the other side of the world has no rich people, and so it must be Oprah Winfrey. And so they ran an article with Oprah Winfrey on the front page. Little known to them, Mr. Dangote, the CEO of Dangote Cement based in Africa, was reading through the article in Forbes and looking at the information published, realized that there was a bit of a discrepancy, because in terms of the richest black person that existed, he certainly far outstripped Oprah Winfrey. So to illustrate, at a certain point in time, Oprah Winfrey's wealth was estimated at 2.8 billion US dollars. Mr. Dangote's, 11.8 billion US dollars. I think he has now fallen to the second richest African on the continent, but purely as a result of markets falling post the various crises that has existed in Africa. So again, I think Forbes magazine had to then print a new issue, which was fairly interesting, of the richest African with Mr. Dangote's picture on the next issue. In terms of GDP, Africa is certainly big enough to be significant. At the turn of the century, more than half of the African countries had a GDP of less than $10 billion. This number is halved, while the number of countries with a GDP of over 100 billion US dollars has doubled. Africa as a continent is best approximated by Bharat in terms of GDP as well as the population size. As a continent, it is significantly larger than Russia and Brazil and is expected to grow significantly faster. In terms of the political environment, Africa has moved from a place where only 3 countries had elected governments to a place now where only 3 countries do not have elected governments, particularly when focused on sub-Saharan Africa. In terms of the improvement in the ease of doing business in Africa, while Africa's size, diversity, and fragmented economies make it inherently a complex place to do business, conditions have certainly significantly improved over the last decade. Using the World Bank's business research as one indicator of trends, many African economies have made substantial progress. Focusing only on sub-Saharan Africa, the World Bank's research shows that 45 out of the 46 sub-Saharan economies they track have improved their regulatory environments for doing business since 2005. In fact, among the 50 economies that have made the biggest improvements over that period, the largest share of them are based in Africa. In terms of stock exchanges, and this is my everyday world, you can see that, that across Africa, we have 24 stock exchanges. Many of those are admittedly smaller, but emerging every day and improving every day. Outside the largest stock exchanges, most of the continent's exchanges, given their uniqueness of situation and liquidity and size, do need to be understood very well to invest effectively across the continent in listed markets. The exchanges obviously vary in terms of quality, governance, liquidity, and most importantly, the cost of trading. Most exchanges are still small, and dual listeds, unfortunately, do distort the picture. When looking at the liquidity across the various exchanges, there are reasonable levels of liquidity on the larger exchanges, similar to many of other emerging markets. South Africa and Egypt are, for example, at the same levels of liquidity as the World Economic Federation of Exchanges average in terms of liquidity. Looking at the GDP across the largest economies across Africa, you can see that certainly, as you can see by the GDP indicators, there are a larger variety of industries and sectors that drive the economy across the continent, rather than just resources, as I mentioned earlier. And there are myriad ways on which to access that growth across the continent. So how do you access it? Well, I've spoken about listed markets. Yes, those are limited. Yes, they have unique issues with which you need to deal in terms of it, but certainly tapping into African listed equity can provide a variety of opportunities. Its market cap is up to 15% of the Eurozone. Its liquidity is similar to other emerging markets, those of Bharat, Mexico, Indonesia. Its valuations are in line with other emerging markets, and more recently, cheaper than other emerging markets. Certainly, you can access Africa from abroad, and I spoke to the dual listings. Many of Africa's prestigious companies are listed on a variety of global exchanges, Canada, the UK, and so you are able to get access to them via those. And private equity, which remains one of the most compelling investment opportunities across the continent, has now become a significant place where there are many managers operating across the continent, where the entry yields into these economies are interesting and exciting, and provide a vastness of exposure to the variety of sectors that drive the economies across the countries in this continent. I think as business people here today, there are important things to understand about Africa and how you access it. And like my esteemed colleague mentioned in terms of how you do business in Suriname, there will be specific requirements of doing business across Africa. And not only across Africa as a continent, but as I mentioned, in each unique location or regional area, there certainly will be a different way in which you need to access it and be able to understand what the unique way of doing business in that area would be. So, there's shared value. Pursuing profit with the purpose of achieving shared value, not only for the business person entering the continent, but for the people that live and exist based on that country. There's a collaborative partnership which must exist across business, government, and the various sectors. There's entrepreneurship which has flourished and which must be able to flourish continually in the conditions that exist across the countries. Regional integration, and of course, infrastructure development, without which no country or no continent can continue to grow. And so in conclusion, I think there's general recognition that Africa is growing fast and that it's funded by private equity and listed markets, as well as significant corporate activity and massive, more recently, infrastructure development. Nigeria has been and is expected to continue to be one of the fastest growing parts of global GDP. Africa has more than 20 stock exchanges, and the listed markets have shown significant returns in terms of the opportunities provided to investors. Transaction pricing across the continent is still very reasonable, and in global terms, across both private equity and listed markets, gives you access to a variety of sectors. Finally, we are seeing investors looking to access the African growth story through all of these channels: listed, unlisted, business opportunities, infrastructure, real estate. and corporate activity. And certainly, while there are many challenges, the future for Africa certainly continues to look bright. Thank you, ladies and gentlemen. I thank you for your attention, and I feel privileged to have been amongst you here and a part of this World Hindu Conference. Namaste to all of you.